This altcoin is ready for a huge pump in the upcoming weeks. The altcoin that we are looking at right now is CRV, guys, and in this video I'm going to give you guys a beautiful trading idea for CRV to measure a potential first target of over a 100% increase. This is the minimum target. What we are looking at over here is a huge reaccumulation range after a huge bear market to the downside. Now we know that these sideways reaccumulation ranges, once they break out, you usually see very aggressive expansions towards the upside. For example, over here, we saw a small reaccumulation range as well. Afterwards, we pump it towards the upside. Over here, you see a reaccumulation range as well. Afterwards, you pump it to the upside. What we are looking at over here right now is a very long reaccumulation range. And right now we know what happens when these accumulation ranges break out. Now you're probably wondering, okay Guru, this is all nice and that, right? But how are we going to execute a trade based on this idea that CRV is going to move towards that range high liquidity pool? What we are looking at over here is a lower time frame reaccumulation range around the range low of that higher time frame reaccumulation range. And even this lower time frame reaccumulation range has been going on for months and months and months and is right now looking for a potential breakout. So what we are looking at on the higher time frame, on the 3-day time frame, is a beautiful range. Why is this a beautiful range? We have pivot number 1, pivot number 2, and then over here we have pivot number 3, pivot number 4, right? And then even over here we have pivot number 5 and 6, which means that we are looking at 6 different pivots, which makes this a high probability range. Then around that range low, that high probability range, we are forming a brand new range. Now for the brand new range, we are also looking at 3 pivots. Pivot number 1 over here, pivot number 2, and then pivot number 3. We are looking at a potential breakout. Now why do I really like the breakout? Because if we go on the lower time frame, on the 4-hourly time frame, and we analyze this local price section over here, what are we looking at? First we have to determine the market structure. And when I look at this market structure over here, I can see a high, I can see a higher low. Then over here I can see a higher high. After we form a higher low, and then again a higher high. Over here we form a lower low compared to this low, the brothers with that high, and then we form a higher high again. Now why is this also interesting? It is because over here when we look at this range, right, that I just discussed, we see that the range high was acting as resistance over here, resistance over here, and then resistance over here. Then over here, when we tested that resistance, we broke out above it with a big hour 4 candle, and then we started consolidating above that crucial resistance area. Now, I always tell you guys to get into the mind of the retail trader. What are the retail traders thinking when they see this breakout above that crucial resistance area that was acting as resistance 3 times in a row? And then the price starts consolidating above that resistance area. Retail thinks that we are looking at a breakout of this range and a breakout above that crucial resistance area. So what does retail really like to do? They really like to open up breakout long positions, but I have taught you guys to never open up breakout long positions, especially not on the first breakout of a range. So let's say they're opening up breakout long positions over here, and their target is over here around $1.55, which is where we have a resistance area. Which low are they going to use to cover their stop? Is it going to be this low over here? Is it going to be this low over here? Or is it going to be this low over here? Now, if we use the lowest low, we can see that the RR decreases towards 1.39. So it's not worth the RR. So they won't put their stop loss over here. If they use this low to cover their stop, the RR is 1.72. Now, retail always targets a minimum RR of 2, but they're not going to put their stop over here. Now, if they use this low to cover their stop, we see that we are looking at an RR of exactly over 2. So they're probably going to use this low to cover their stop. Now another reason why they're opening up breakout long positions over here is because retail thinks that this over here is a valid break of structure that I marked out in yellow. Why is this a fake break of structure? Because like I said, we analyze the local trend, right? And the local trend is a high, a higher low, higher high, higher low, higher high. Now this is not a valid break of structure. Why? Because the high that we broke did not bring us to a new low compared to this low that brought us to that high. So it's not a significant high to break. So it's a fake break of structure. Another reason for retail to open up breakout longs with their invalidation beneath this low. Now if we switch on replay mode, we can see that eventually everyone that opened up long positions over here and put their stop beneath this low because of the breakout and because of that fake break of structure, they got wrecked. And that is something that I really like to see, and that is something where my interest is getting sparked into a potential long position to target a breakout of this range. Okay, so retail got wrecked on their breakout long positions over here. After they got wrecked on their breakout long positions, price impulsed up, once again reclaimed that pivotal range high level over here, and now it has shifted structure towards the upside on the hour 1 time frame. Why is this a valid shifted structure? Because this high brought us to a new low compared to this low, and this low that brought us to this high. So it's a significant high to break. And we open and close candles over here above this high, so it's a valid break of structure. Now, because of this break of structure, I am getting my trigger to start looking for execution of a potential long trade. Because the daily trend is to the upside, the 4-hour trend was already towards the upside, and now the hour 1 trend has shifted towards the upside as well after taking out crucial sell-side liquidity. We have a deviation above the range high that led to a deviation below the range high, and now we once again reclaim that range high. And I've taught you guys that usually that second reclaim is the true reclaim before a potential expansion. So I'm looking to position myself long on CRV, execute a long trade to target a breakout above this lower time frame range high towards the higher time frame range high. Guys, you can now also trade Woo, Bitcoin and other crypto pairs on PrimeXBT. They are now finally offering crypto futures trading alongside trading commodities, Forex and more. Definitely one of the most trusted exchanges out there, and if you want to sign up, make sure to use a link in the description down below and you will get a 7% deposit bonus. Now, when we look at the potential execution on this trade, the first thing that I see is this hour 4 bullish fair value gap that aligns with that range high. Why do I like this hour 4 bullish fair value gap? Because it aligns with this pivotal range high that was acting as resistance, not once, not twice, but 3 times in the past. And the fact that we break out above it once again with a strong bullish hour 4 fair value gap is indicating a potential breakaway gap and is indicating strength from the bulls that they reclaimed that range high. Now, that hour 4 bullish fair value gap, if we are going to go from our swing low to our swing high, we switch on our premium and discount level, we can see that this hour 4 fair value gap exactly aligns with our discount area. And we know that we always want to look for longs inside of the discount of an impulse, and we always want to look for shorts inside of the premium of an impulse. So beautiful, beautiful, perfect alignment of that discount area with the hour 4 bullish fair value gap. On the other hand, we had a bearish hour 4 fair value gap over here, right? On that impulse to the downside, we created this bearish hour 4 fair value gap. Now look how we invalidated that bearish hour 4 fair value gap the first time that we tested it with this bullish hour 4 candle close. So that inverse hour 4 bearish fair value gap is exactly aligning with the bullish hour 4 fair value gap of the last impulse towards the upside. That is not a coincidence. That they both exactly align with the discount right on top of that range high level is indicating to me that I think that smart money is trying to give us a certain story, and that story is that they are probably, hopefully, I would say, retest that range high. That's where you look for longs. You have a very clean invalidation over here beneath this low, and you have a very clean high time frame target around $1.59. Now let's say we are going to potentially execute this trade idea, and we are going to ladder in some limit orders over here around that range high at the opening of that hour 4 bullish fair value gap with our invalidation over here, and then we target that higher time frame range high over here. We are already looking at an RR of 7.16, which is a beautiful high RR swing trade. Now over here, we can also decide to even tighten our stop towards this low over here, okay? Then the RR even increases towards 10.5. And I think this is a beautiful potential trade. Also, if we look at the EMA alignment, we can see that the hour 1, 200 EMA and 200 moving average perfectly align with our area of interest. If we check the 2-hourly time frame, we can see that the 100 EMA, 200 EMA and 200 moving average all beautifully align with our area of interest. On the 4-hourly time frame, 100 EMA beautifully aligning, and slowly but surely the 200 EMA and 200 moving average on the 4-hourly time frame are also starting to align with our area of interest. I think that this is a very clean chart that is ready to potentially break out. All we have to do is hope and wait for a pullback towards a discount of this last impulse towards the upside towards that range high on the lower time frame. If we retest it, it should provide beautiful long opportunities towards that higher time frame range high, which is around $1.60. You can also pay this with spot because that would already be a 100% increase. Now don't forget guys, if that higher time frame range high starts breaking out, then we should target at least $3 or maybe even more for CRV, which could offer an even better gain from the current price. I hope you guys enjoyed today's video guys. If you guys do, please make sure to smash up the like button, make sure to subscribe to our YouTube channel, and if you guys have any questions, feel free to let me know in the comments down below and I'll make sure to answer each and every one of your questions. And then I'll catch you guys on Monday's video. Ciao ciao.